Good morning, ladies and gentlemen. Good morning, everyone. How are you guys doing today? Welcome to another morning briefing webinar. Here we're going to analyze the markets. We're going to see how the market react so far based on the upcoming news event. As we know, today we have the non-farm payrolls. Hello, William. And it's going to be an interesting number to see. We're going to just go right away to the charts, and we will see what the price action is telling us. But before that, definitely we will have a look at the major news events as we do on every live. So let me find it here. So from our calendar, we see today, September the 1st, we have the balance trade in Germany. And the market will definitely going to focus on this event here. Non-farm payrolls, unemployment rate, the consequence, and they expected to see less jobs registered this month compared to the previous month. And if this is the case, we will see the actual number, what it's going to be, and how the market will react, and if we're going to have a significant deviation in the unemployment rate. But so far, what can we anticipate is a number lower than the forecast. So and to be honest, based on my experience so many years, at many times we have some surprised when it comes to the non-farm payrolls. The forecast sometimes with the actual, they have absolutely no correlation, and we see a number here skyrocket. Okay, and of course the market reacts with a very, very, very tricky way, and with too much volatility. So let's move on. Premium analytics, major and top headlines for today. New Dallas Fed chief puts inflation fight on front burner. Europe wait price gaps to bring down electricity prices. They gonna actually host a meeting, the energy ministers on September 9th, and they were trying to find an alternative ways for this winter. Here, the UK Maritime Insurance Hub commits to cap prices of Russian oil. But Russia somewhere says that they don't want to, I think here it says, yeah, they refuse to sell oil at a capped price. So that will be an interesting to see the outcome, what is going to happen, because definitely we experience in any country we live, if we are in Europe, in Asia, in Australia, in USA, wherever we are, in Africa, we get really affected as consumer by this battle between the oil prices. Ukraine says Russia is using cargo ships to ferry weapons to the Black Sea. Shell, ExxonMobil sell California oil and gas producer to German asset. It's a deal they made between them. So that's all for today about the major news events. Straight to our chart. Start from the pound US dollar. We talked about this area here. At this point, we were expecting to see the buyers to take control, but this bearish engulfing totally changed the direction of the market. Then we said after that, we start looking for short plays, If we go to the 4-hour chart, we had that lucrative opportunity here, bearish engulfing. Here it was the entry there, 63 plus the spread, let's say 65 pips, and the market went all the way to, I think, register 190. Yeah, 191. So it was a 3-to-1 reward to risk trade. Very, very good opportunity. That's the one we had, because we said, guys, when we break below, then any retest, we look at the 4-hour charts or even 1-hour charts. If we find some good opportunities, we can take them to the downside. So far, we have some room to go until we retest this level here. We don't know if the market it's going to just do it straight away, but definitely the anticipation of this major event, it's still pushing the pound lower and the US dollar higher. So still bearish for this one until we retest this level. Any opportunities on the intraday charts, they are good to go. A question came from Mr. Carlos, how to check a pair with a very high volatility? I will just answer this question, Carlos, simply by looking the candles, the size of the candle, not the tail, just the fill candle. And if you see a long candle, a long body compared to the 5-10 bodies, the recent 5-10 bodies, then you understand that it has too much volume within this candle. Now, the volatility is how much the price fluctuates within a trading period. So this candle here, for example, in order to be filled on the 4-hour charts, 1-hour charts, 15-minute charts, because this is a daily candle. So it took, if we take one daily candle, in order to be completed, it requires 6 candles of the 4-hour chart. Well, this one here, the 6 candle of the 4-hour charts to be filled, they require each one 4 candles of the 1-hour chart. So let's, and then it goes as we go in lower time frames on the 15-minute charts, etc. Now, the volatility comes in play when we see these candles here. Until the completion, they fluctuated in a specific amount or in a decent size. Then we say we have too much volatility in the market, but it's how to monitor it and how to identify it. I think it's better if you go to the 5-minute charts or 15-minute charts and maybe look there for the random swings, so you can see how a daily or a 4-hour candle develops. Let's move on. I hope this is clear for you and it makes sense. Euro US dollar. Comparing to the rest currencies, Euro this week was performing quite well. It gave us some good opportunities, as we discussed on Wednesday and on Monday. So this area here was a previous support, which we didn't see any significant price action signal indicate that we're going to start looking for shorts, because the price remain above this support. It means sellers, they simply weren't there to push the price lower. But definitely, because the US dollar is dominating the market, we didn't plan to look for any longs. And I clearly stated that on the 4-hour chart, even if we're going to have a series of higher highs and higher lows, it's going to be very dangerous, this pair, to take it. And I hope that nobody was buying at this stage for swing trading. If you are trading on the 1-minute charts or on the 5-minute chart, then you find some higher highs, higher lows, and you enter, then you can definitely have some good results. But If the case is you are a price action trader, like I teach you guys here, and you stick on the higher time frames with the higher probability trades, then you shouldn't be involved on that one. Let's go to the USD JPY. The market broke and closed higher here. And if we go on the weekly chart, I don't see any reason here. I want to check the monthly chart. Let's zoom out. So the next level is this one here, where price in ages ago, it got rejected. It came all the way to 147 Japanese yen per $1. So if the market it's keep appreciating the US dollar, then we definitely can see some more bullishness. But so far, we see that we have higher highs. 4-hour charts, any trend lines, moving averages are good to go. 1-hour chart as well. Everything it's still bullish for this market here. So we are still buying on any dips. So that's a good pair to keep an eye on. USD switch France. After we broke and closed above this point here, we definitely stated that we are looking to buy with a nice price action and target this area here. On the 4-hour chart, remember we talked about this bullish engulfing. This one here was created on a higher high, retested the last swing here. So, and it was right at 8 o'clock in the morning, European time. So it was a good opportunity for those who were around, and a good, decent reward to risk. So now we approach this area here. We will see what the market is going to do. But if you guys notice on the 4-hour chart, sometimes it's good to go down to the 4-hour chart to see the price action and understand how the traders, the big market participants, they react. So we have these strong bullish candles here, these long bodies, comparing to 1, 2, 3, that's the 4th one, which the bodies, they are very small and stayed within this candle here. So it looks like sellers are not in control. They don't demand any lower prices. So this kind of behavior clearly shows that buyers are in control. Now, when we're going to have this candle completed, if it's going to stay within this range or if it's going to close bullish, definitely it's going to be a good opportunity to buy. And really, when you start paying attention to how the price behaves on the daily chart, weekly chart, and even to the 4-hour chart, sometimes you have a very, very good understanding and you develop that price action intuition about what the market is telling us at any given moment. And I really encourage you to start looking the market this way, guys, because the price action leads all the indicators. The price action creates the swings in the market, and the price action shows us what possibly can happen next. Let's move on to the Aussie US dollar. We marked this area here. We said after this new high we had in the market, and then we registered this lower low. We said that the price can push to the downside, especially as the US dollar in general is dominating the whole currency market. Now, we had this bearish engulfing. That was a very strong indication that sellers are in control. And I mentioned you that usually the bearish engulfings in the next few sessions, they get filled around 50%. And that's how I place my limit entry orders. So a sell, when we see bearish engulfing, if we measure here the pips, and we see that it's 120 pips. So if I want to enter right at the close and have my stop above, then I need the market to move 120 pips to give me only 1-to-1. That's, for me, it's a very long distance, and I don't like to take this trade because these markets on a daily basis, they're going to move around 60, 70, 80 pips. So it's a low probability trade that in the next few sessions, the market, it's going to just give me 2-to-1 or 3-to-1. So I prefer to use the limit orders. I mark the 50% of the long engulfing candle. Again, when the candle it's really long, not when the candle it's the daily candle, it's about 30, 40 pips. So 50% here, it's 60 pips. Until this level here, we have 260 pips. So far we are 160 pips, and it's a good opportunity. So now the market make this lower low. We are still looking for shorts because we are in a downtrend. If you draw your trend line here, you can see that the market make the first cycle. Then we are ready for the next cycle. We keep an eye on the 4-hour charts. Any strong price actions, we can take them to the downside. I shared with you the checklist. You can definitely print out the checklist, put it in front of your desk, trading desk, and try to see the patterns. And again, you can use the checklist in all time frames, but if you're going to use also the price action criteria, it has higher probabilities on the higher time frames. So look at, guys, what we saw on the USDCHF 4-hour chart. See these inside candles here and the dominance of the US dollar. If we go to the Aussie, we see similar pattern. Dominance on the US dollar because the Aussie is going down. It means the US dollar is stronger. And the last four 4-hour candles, they showed that the buyers weren't in a position to create higher high in the market. So this, if you see the hours, this is what's within the Asian session. So the Asian traders, the Asian session traders, they didn't create any highs in the market. They weren't actively buying. So it's a good indication that most likely we can see a push to the downside because the dominant force is sellers. Okay, let's move on. Mr. Carlos, just one question more, definitely. But like, how do you find pairs with the best volatilities? To be honest, I do not trade volatility, so I'm not that familiar with how to trade the volatility, Carlos. So sorry for that, but I don't have a clear answer in this question. I don't find pairs with best volatilities. I find pairs with the market structure, the higher highs, the higher lows, and then I look for strong price action, as I mentioned so many times. Rob has another question. You talk about 50, 60 pips before take profit. But no, I talk about 50, 60 pips before about stop loss, not take profit. If I have on a daily chart a price range 50, 60 pips, like let's say this one here, the market is in a downtrend and we have this bearish engulfing here. This one here, it's 60 pips, 61 pip. Okay, because this currency pair, in general, the currency pairs, let's say the major currency pairs, Aussie US dollar, if we measure the lengths, we have here 90 pips, we have here 90 pips, we have here 50 pips, we have here 80 pips. On average, maybe they give anywhere between, let's say 50 to 80 pips. So if I enter here and have my stop there because it's a bearish engulfing in a downtrend, so I have a 60 pips stop loss. it has a very high chance, this market, in the next few sessions to give me those at least 80 to 100 pips to help me make more than 1-to-1, ideally 2 and 3-to-1. That's all. Daily charts, what amount of pips do you should take as a stop loss? Yeah, I just said that, Rob. I hope it's clear for you. If it's not clear, just let me know, please, so we move on to the next pair. Guys, the reason I stopped and I answer questions, I believe that many of you have similar questions and you just let them sometimes. So if someone ask about something, I prefer to just explain it straight away. So this one is still a good pair to keep an eye on for short plays. Kiwi, it was the clearest pair for this week. I mentioned it on Monday. I also mentioned it last week. I hope you guys kept an eye on that because it had some good opportunities, as we said, on the lower time frames, 4-hour, 1-hour charts. We had during the Asian session on the 1-hour chart, we had, for traders who were around, we had this 11 pips opportunity and almost 2-to-1 until it reaches this area here. Yesterday as well, we had on the 1-hour chart this tail bar, downtrend, pullback, rejection. So entered here, stop 13 pips, and we had more than 3-to-1 here. That was a good one. But at the beginning of the week, we had this bearish engulfing candle around this last swing with a fib retracement and entry here, stop here or there, take profit was somewhere here, and it was a great opportunity. That's why we do this analysis. That's why I really explain you and I give you the, not only to explain you that, yeah, this market is down and we rather sell instead of buying, but also how to participate in the market. It's different to know what to do, but you also need the how are you going to do it? Okay, and that's why we are here. And I hope that if you are new with us, slowly you're gonna understand how we trade, and it's gonna help you to implement in your trading. So let's move on. Euro AUD. After this bullish engulfing here, again, we were on a downtrend. We weren't really sure about the market. So I didn't get involved with that, to be honest, because it was in a strong downtrend. Then on the 4-hour chart, we saw this higher high, but I didn't see any strong price action here to get involved. After this one here, the market makes 68 pips. It was 100. It wasn't even 2-to-1 for me. So unfortunately, I didn't take it, but it played out. You see, that's trading. And to be honest, I wasn't focusing on that. Right now on the daily chart, we are sitting around this previous resistance area. Now, today, and that's the thing, guys, if you decide that you want to participate as buyers from here and you believe that the price, it has this room to move until the recent resistance. So you can find opportunity either on the daily chart, 4-hour, 1-hour chart with a favorable reward to risk, at least to make, let's say, 1.5 2-to-1, and you can participate and target this area here. After the market reaches this level here, the reason we say we stop our activity, it's because we do not know if some major players, some funds, some multi-million billion dollar orders, they are sitting here as limit orders to be executed to the downside. We don't know that. because this is a downtrend, and maybe some major funds, they are looking for this area here as a, let's say, premium area to start selling. So they're going to put their orders here, obviously. So for us, it's better to have to clearly understand where our boundaries are and try to capitalize within these boundaries, because we don't want to get caught simply in this type of uncertain, low probability trade setups. Okay, so for now, there are no, I don't have any bias here. Anything can happen. Maybe the price is going to break, but if the price is going to break and close above, definitely we're going to look for shorts on the lower time frames. If the price is going to be rejected, it means that we have range here, because we broke the structure. That was the impulse to the downside. We reverse 100% back, and we are back at this resistance. So I rather see a higher close here and then start looking for buys. Gold this week was again one of the best performance, and we talked on Monday that this week we are looking for shorts. We said on the weekly chart, the last 2 weeks we saw this strong bearish close here, bearish candle aligned with a downtrend. You see, guys, we have this structure of lower low, then we had this retest here, and then we saw this massive bearish candle on the weekly chart. And of course, on the daily chart, we could see that this market is making lower lows. All right. But specifically, last 2 weeks, we said we are looking to sell. And there were so many sell opportunities, especially I think this one was after we had our session, or it was, I don't really remember, but that was a great opportunity. Downtrend, daily is down. So 4-hour chart is down as well. And then we see a retracement in the 4-hour chart, a nice pin bar, very, very, very long tail compared to the small, tiny body. So we had that opportunity to sell here, put our stop there, and just trying to target lower levels on the daily chart. Or if you miss that, you see this almost bearish engulfing, but really it opens there, it reverses 100% all this buy candle, close below. That also was a good opportunity. So I hope you guys got involved with this market. Let's see some other questions. I understand sometimes. Oh, Rob, okay. The platform, I try to wait. Rob says that I try to wait for a whole pattern to form, aiming for 300 pips or more. Rob, that's if you aim for 300 pips, and guys, that's a great question for everyone here. And let me just simply say this. If you trade a pair, or maybe I can type here. Okay, if you trade a pair, let's say pound New Zealand, which we know that this pair, it has an average spread of, let's say, 8 pips. It's 8 to 10 pips, let's say, pound New Zealand. This pair here, yes, on a daily range, on average, it can give you anywhere between 150 to 200 pips. So if you are targeting 300 pips with this pair on the daily chart, it's very, very possible. But if you go to, let's say, AUD, as I mentioned before, AUD, USD, the spread here, it's about 1.5, 2 pips. So on a daily basis, this one here, it's going to give you anywhere between, let's say, 60 to 80 pips. If you are targeting 300 pips, maybe by the time it's going to make the strong move, it's going to retrace back if you are trading short, retrace back, take your stops, and then keep falling. So I will better advise you in terms of not personal advise you about any trading decision, just to make it clear, I will encourage you, let's say, to use go insert indicators. Let's see. Oscillators and average true range. Go insert indicators, oscillators, average true range. Keep it on the period 14. And if you add it in your chart, you will see that the average range move of this currency pair, let's say we are on the gold, is here. It's about why it says 18.25. I don't like that. This one here, it looks like 180 pips. Yeah. So it says that here for in the last 14 days, it looks like 180 pips on this pair here. So if you're gonna put the average true range indicator, it can show you the average price range on that particular pair. And it will be better if you're going to use this if you want to determine on average how much the price movement is for that pair. All right. Another question. I understand what you were saying. Okay. Sometimes I aim for 1,000 pips over a few days to a week. Rob, I don't want to disappoint you, but to aim on 1,000 pips, it means that the market must be performed so well and to have so much volatility from the news events, which it's going to give you the desirable outcome. So better if you use the ATR indicator to determine how much on average the price has moved. So Luis Ernigue, hi Theo, mentioned the checklist. Sorry, but can't see where do I find it. I will show you in a while where you can find it. And never question, ask the question. I like this name, never question, ask the question. I've lost every, oh wait, I'm just paper trading. Okay, so you are paper trading, that's fantastic. Make sure you either you follow the rules we taught here, or you make your own rules and stick to that. Okay. Hello, Raquel. Let's have a look at Bitcoin on the daily chart. We said that we are bearish because of the market structure. Last 5 days, the price on the daily chart, it doesn't move at all. And guys, this is the confirmation of what I told you the last few weeks, what I'm keep telling you about the cryptocurrency markets. We see that the price is dropping. Sorry, we see on the moves to the upside on these retracements that the price is gaining weight because the US dollar is simply retraced. We don't have any buying pressure from Bitcoin buyers to dominate the market. And that's the reason we do not see any clarity here in market bias. We see that the price start around this area, the 20,000 area, which is a major number for the Bitcoin. If you look at the charts, you will understand why. Because in 2017, we had this peak on the 20,000 mark. So everyone expected that this is going to be the beginning of the new bull run. But the price never lied to us. And we see that this market, it doesn't go anywhere. And it's most likely because of it's controlled by the power of the US dollar and not by the strength of Bitcoin buyers. And that's my opinion. Raquel, Theo, can you repeat the spread pip count for making target decisions? You can insert indicators, oscillator, average true range, and let me work it out a little bit about this one, because on at the MT5, let's say, let's put some red here. You can use the average true range in order to see the range of the previous 14 trading days, and that will help you to understand how much range is within this market. Let's do it on the pound. Let's say insert indicator oscillator average to range. So on the pound, we can see that we have, if you see these digits here, you can see that 113 pips, it's the last 14 days average range. So if I want to put my stop somewhere, I'm not going to put my stop 300 pips above the entry price, because I know on average I will target about 113 on a daily basis. And we've done too much of theory today, but I think it was worth, right, guys? It's worth when we find actual examples on the price chart to tell you the theory, so you can combine it the next time you're going to find yourself in a similar situation. Let's have a look at the DAX 40, another outstanding performing candidate for this week. I totally remember last week, guys, when we saw, I think it was on Friday, and we said that on Monday, when we see this strong impulse move, breaks below the support, this bearish engulfing, we anticipate most of the time a retest about 50% on these candles here. And we had this, you could have a limit order on the, you measure the candle here with your fib retracement, you put the 50% mark, and then you can place a limit order 50%, the stop above, so you have higher reward to risk, and this is still playing quite well. Or on the 4-hour chart, if you were around, we talked about this nice bearish pin bar, very decent size, 88.2. You could target here is it was more than 3-to-1 trade. It was almost 4-to-1. So you see how the market structure on the higher time frame allows you to understand what's happening, and then you can monitor the lower time frames to find a nice tidy price action entry from a level of support or resistance in this case, and you can participate in the market and have a nice trade, nice outcome. DAX, it's still looking bearish. We are still in a downtrend. Guys, don't get confused all the time by these pin bars in the middle of nowhere. We want pin bars from support, not from the middle of nowhere, okay? So I stretched it a little bit today, but I hope that was a really, really good, valuable session for everyone. We prefer to learn a lot, I think so we understand when we face this the same similar market behavior, to know how we're gonna take the trades, or to know how to avoid trades. Okay, in terms of the last thing, in terms of where to find the checklist, let me share. One second, guys. Let me just go to the YouTube channel and quickly try to find for you. So let's. Guys, you go to Admirals YouTube. Admirals YouTube channel. I'm going to send you also the links here for those who are not registered yet on the social media. And please make an effort to subscribe to this social media, because they're going to help you with information and notifications. So if you go to the spotlight, That was from Paul. Prepare the US Open in most powerful currency patterns in the Forex. How to read price action. I think I have it here. Guys, this one here, it's the webinar I've done about this price action, and up. And I also have the checklist. Most of the times I have the checklist on pretty much all the webinar I'm doing. So, but now I'm giving you directly the webinar so you can go to watch it. And definitely at the end, we have the checklist, we explain it. And please, please, please make sure you tried it on a demo account and see how it works for you. For me, it works the last more than 6 years, 7 years in trading. So I'm sure it's going to add some value to many of you. Guys, thank you so much for your engagement today. It was really, really a pleasure to have this morning session with you. I wish you the best luck with your trading, especially around the non-farm payroll event. Please make sure you manage your stops if you are an intraday trader. And I wish you a happy weekend and look forward to see you again on Monday, same time. Thank you so much. Bye-bye.